Hello everyone, how's it going? So, welcome back to my YouTube channel. In today's video, I'm going to explain you about short delivery, like how this works and what is the auction market and how the settlement process works from the exchange. Okay, so yeah, first of all, coming to the point, in Indian markets, if you buy a stock in cash market, you can keep it for overnight. There is no issue with that. Okay, and but you're not supposed to keep short positions overnight. Okay, you can keep in the future and options, but in cash market, definitely you cannot keep it. And first of all, the brokers will try maximum, okay, not to allow you taking short positions. For example, what happens, so normally if you try to sell the stock in CNC, the broker will not allow, because they know that you're not holding that stock in your demat but you're trying to short it. But there is something called MIS, margin intraday square off, which is particularly made for an intraday. Okay, even in intraday you can take a short position, where in case if you fail to close that positions by 3:20, the brokers will automatically square that positions, right? That is a safer side. So till here everything is perfectly all right. But what happens, sometimes if you take a short positions, and let's say the stock has hit a upper circuit where the transaction will be halt, I mean no transactions will be going on. Okay, you will not be able to close the positions, first of all. And other consequences may be, certain times, due to illiquidity, the stock don't have much transactions going on, buy and sell. In that case as well, the stock can be a short delivered, right? So in this scenarios, even broker cannot do anything or you cannot do anything. So that is a risk of this. And yeah, so what will the exchange does this. So for example, let's say you have shorted the stock on Monday, and Monday end of the day, extra 20% of margin will be blocked from your ledger. Okay, and then tomorrow will be a auction day, that is a T1 day. So the market will, I mean, so the exchange will go to market and they will conduct a auction. Exchange will be a intermediate here, because exchange is a responsible, because you have short delivered some stocks where opposite person who was buying that stock, he has been default. He didn't have any, I mean, a problem. He just normally bought it, which he is doing everything correct, there is no issue from his side. But it is responsible that you must deliver that stocks, right? So what will exchange do? So they will go to auction market, each and every day there will be a auction market connecting 2 to 3 in between this time. So what will the exchange does is, they will ask if any person in the market is holding the stocks, they will be eligible for a auction, right? So here in this example, in Ashok Leland example, you can see the closing price was 232. Okay, this will be a closing price, and upper circuit of 20% will be there, that is 278.40. Low circuit will be this price, 186.80. Okay, so in auction market, so in between this price it might get settled. Okay, so let's say 250 or 240, something like that. So whatever the difference is there, that will be a loss for you, who you have shorted the positions, and the same will be also settled to the buyer demat account. So please note, so T plus 1 day is a auction day, T plus 2 days is a settlement. So okay, T plus 2 days, that is on Wednesday, end of the day you will receive a contract note as well regarding all the details. Okay, so that is one thing. And sometimes what happens, let's say the closing price was 232 and the auction price is less than 232 where it is getting settled. In that case you will not be having a, I mean, profit benefit here. So even though the stock has, I mean, it's less than closing price, the exchange will settle your trade at a closing price only. Like for example, let's say you shorted at 220 and the closing price is 232, sorry, 220 232, so 12 rupees will be a loss for you. So this amount will go to investor protection fund. Okay, so yeah, so above whatever is there, the loss will be there, they won't be having any profit for you. I mean, it's not like you're holding the stock overnight and you're making a profit. It doesn't happen. There is also another scenario. So sometimes what happens, even in the auction market, the stock will not get settled. In that time what happens, the exchange, whatever it's blocked, right, 20% extra margin, that margin will be given to the buyer in a cash settlement basis. So the buyer will not be getting a stock, instead he will be getting a cash settlement amount. to add it to his ledger on T plus 2 days. I mean, the cash settlement will happen. Okay, this is the entire process. It's a very simple one. So it's better if you just keep in mind the few important points whenever you sell the positions, right? Make sure you close it end of the day, or else the brokers will close it. But even both, I mean, certain times due to certain limits, it can go to short delivery. And even in the BTST scenarios, buy today sell tomorrow scenarios, at that point of time as well it can go. Okay, because for example, let's say you purchased the stock on Monday, and the in Indian markets the settlement is T plus 1 days, right? So Tuesday end of the day the stocks will be credited to your demat. But before getting credited to your demat only, you sell the stock on Tuesday. In that case also there is a chances of short delivery. Okay, these are the scenarios I just wanted to cover this. And in case if you have any queries, you can just post it in the comment box. Please do subscribe. I'll be uploading more of these videos to help you. Thank you for your time. Have a nice day. Bye.